There's only about one thing certain every night, and that is when I wake up in the morning, I know that I have absolutely no idea of where the markets went overnight. Over the last few weeks, we have frequently seen the Dow Jones Index move more than 150 points every night. Last night we saw a significant risk-on night for investors, and the Dow Jones increased about 240 points. The reason for this rally came twofold. The first was positive economic data coming out of the US and also China. And the second was that in the afternoon, a US government spokesperson came out and said that the US was willing to support the European zone with further monetary assistance if required. Once again, currencies followed the risk-on theme, and the Australian dollar, New Zealand dollar and the euro all had a steady big tone to them overnight. The New Zealand dollar currently sits just under US 75 cents. The positive economic data which came out of the Chinese economy and the US over the night supports our view that the global economic recovery is continuing to gradually improve. However, back home in New Zealand there has been a continuation of mixed data recently, and this is the same for Australia too. The end result is that at the front end of our interest rate curve we have seen markets there rally, and this has meant that interest rate swaps over the last 3 weeks have come down in the short end about 10 to 12 points. However, at the long end of the interest rate swap curve, we do continue to see a sell-off in the 5 to 10 year rates. This is due to the fact that the mixed economic data is causing some uncertainty about when the Reserve Bank of New Zealand will shift the official cash rate. Our economics team are continuing to forecast a March movement. However, there has been some mixed evidence that this may be pushed out until June next year. At the end of the day, all interest rates are relatively cheap at present. However, the shorter end still remains the cheapest form of debt. The twice monthly global dairy trade auction occurred overnight, and prices were once again solid. Prices continue to remain above the $3,500 mark, and the trade-weighted index did increase about 1.6%. When we look to forecasting the dairy payout, we do see 3,500 as a significant level to enable Fonterra to produce a milk solids payout in excess of $6.70 per kilogram of milk solids. With our currency declining recently and prices approaching 3,600, we do see some slight tailwinds to our forecast at the moment. Over the next couple of months, we will eagerly wait to see if prices here can hold, and then maybe we might look at adjusting our current season's forecast.